Hey guys, FutureMeDead here with a video on dollar yen. This is first video of 2015. First of all, I want to apologize for my delay in pushing out these videos. Some of you may know I've been working on my website FutureMeDead.com to kind of get my thought process and in-depth analysis out to you. I find that trading technically, simply, it's not fit for Twitter. Twitter's 154 character count, simply there's no way for me to summarize all of my thoughts in such a short in such short character length. So hence the website. If you guys get a chance, go over to FutureMeDead.com. There's a lot of free content on there. Most of it is free, minus my trade setups, which some of them will be free. So bookmark that. Stay tuned for content that I am pushing out daily on there. But back to this trade here. This is an active trade, and the purpose of this video is I kind of want to go over my thought process and how I've managed. Actually, let me backtrack. Why I entered the trade and how I've managed my risk so far. So first and foremost, this currency pair here has been in a very large uptrend. Actually, let me go back to let me zoom out, go over to a daily chart, and you can see that the stock is moving in this triangle formation, but it's just a pause in a larger trend that has been going back to 2013. And in fact, if I zoom out more, you can see that this is just clearly going up. Don't fight the trend, guys. Identify the trend and trade with the trend. That's one of those things that when I learned to do that, it definitely increased my profitability over the long run. So going back into the short-term time frame, this is a 4-hour chart, and by that I mean every candle is representative of 4 hours worth of time. This termination point here of wave 3 was on December 5th of last year, and since then has been moving sideways in a coiled fashion. In Elliott wave terms, this is a contracting triangle. The most bullish way to count this is with the current labels that I have in place, where we have a 3-wave decline. And by the way, every letter here should subdivide into a 3-wave structure. I don't have the substructures labeled here, but this is indeed clearly not impulsive in any way, shape, or form. As you can see that by the contracting trend lines from the lower highs and the higher lows as time moves forward. So from this December 5th, we have the initial decline, 3-wave decline in wave A sharp move in B, a complex correction in C, which is very common in contracting triangles. Wave C usually lends itself to be complex. We have a 3-wave rally in D, followed by a very complicated and overlapping wave structure to complete wave E. So in total, once you have an A, B, C, D, E, the larger degree pattern, which is the triangle, is complete, and the larger trend can resume. What that means is that wave 5 is working its way higher. The minimum requirement is for a new high above the termination point of wave 3, which comes in at 121.83 at a minimum. Now there is an alternate count to this, which simply states that wave D, we are currently in wave D. Oops. And that would be fine. What all that means is that the triangle, wave 4, is buying time. It doesn't invalidate the pattern. It just simply means that the triangle is still underway. But since I'm already long and in a winning position, I'm going to track this as if wave 4 is already complete until proven otherwise. So now what I want to do is I want to talk about why I entered this trade and where I placed my stop losses. The first thing I saw when I pulled up this time frame and saw this triangle just jump out at me, what I did is I initiated a long position here with 2 mini lots here. That's not actually $20,000. It's 2 mini lots. And what I did was I placed, since I was playing this as if it's a triangle, I put my stop loss where the triangle would be completely invalidated. In this case, it would have meant a drop below the termination point of wave C. What happens is, if this price would have continued to go lower, this lower trend line here would have been broken and we would no longer have contracting trend lines. It would be some other pattern. So that's where I initially placed my stop loss, somewhere around, I think it was hole number 116. The low here actually was 115.84, as you can see here, 115.84.6. So I think my stop loss was at about hole number 116. But because this was a high confidence trade setup and I was catching it towards the completion of the pattern, the subsequent price action has been favorable to me. So what I did then was move my stop loss from about 160 pips lower, and since it's 2 lots, that's actually double that. So I was risking about $300 and change to break even. That was my initial form of risk management. You know, whenever you have a trade go your way, some of you guys have heard the saying, you know, don't let a winning trade turn into a losing trade. So that's, you know, it's basic and it's important. Risk management first, protect capital first. So stop loss from 116 to break even. At this point, it's a free trade. What happens is, as this price continues to go higher, it's going to subdivide into other Elliott wave patterns. In this case, I'm counting this as an impulse, a 5-wave move higher. So there are rules. You know, let's zoom in actually, so you can see better what I'm talking about. So now we're looking at an hourly candlestick chart. This is a termination point of wave E, and you can see that this is clearly a wave 3. This is a potential wave 1, and I'll just go ahead and label this wave 1, 2, 3. You can see we had a setback here in wave 4, and this wave 4 here was a retest of resistance. You know the saying, what was once support becomes resistance, and vice versa. So in this case here, I'm drawing this trend line here from this top, connecting it here, extending it forward, and you can see that was a termination point of wave 4. This was very predictable. I saw this in real time. I didn't book profits here. You guys know the other saying. This is, you know, a culmination of trading experience where, you know, we all know the rules. It's just actually applying them is where, you know, you'll turn to be a profitable trader in the long run. So I let this run lower. I did not book profits, not even partial profits. What I did is again, I managed my risk by moving my stop loss higher to break even. This price went lower in a wave 4, and now we're working in wave 5, which looks to be almost complete. So maybe I'll book some profits. You know, in this case, since it's only 2 lots, maybe I could sell 1 mini lot, you know, ringing the register for that, and then leaving the rest to run. So this would be a wave 5 here. I don't know the larger degree if this is going to be a wave 1, or if you recall, the alternate count is that we are still in a larger triangle, and this is a termination point of wave D before we go lower. I'll decide that in tomorrow or in the next few trading sessions. But let's zoom in even more. Let's go over to a 15-minute chart. You can see wave 1, 2, this was 3, down in 4, and we're working in 5. Now clearly wave 5 is subdividing into its own 5 waves, which is what you want to see when you're trading with the trend. This is a wave 1, so we have wave 1, wave 2, wave 3, potential triangle in 4, A, B, C. No, this can't be. Maybe this is still a wave 4 underway, or this was wave 4 and we're finally, eking out a couple more pips before reversing. Now the third step, I don't know if you guys were able to see, my stop loss is actually above my position contract. This is where my position is. That's because once this moved higher, once I saw this wave 4 terminate and move higher, I moved my stop loss to where potential wave 1 of 5 is. Again, not only minimizing risk, but at this point guaranteeing profits should this go south. And that's the way I trade. I trade with the trend until the trend reverses, and I'm stopped out. I'm stopped out, but I'm still profitable. So yeah, the other thing I want to show you guys too is on multiple time frames, to kind of compound that, this is an impulse wave that is soon coming to an end. Look at the RSI here, the momentum indicator. We have higher highs, but we have lower highs in momentum, which is indicative that a fifth wave of some degree is underway. And this is where you want to get out. You want to book partial profits or all of your profits. In this case, considering the context that we're in that I foresee that this is going to go much higher in this degree, and one larger degree. I'm not going to book profits for now. I may book half, but this is how you let your winners run. You don't just do it arbitrarily. You want to follow your analysis, again, until it breaks down. In this case, it hasn't broken down. It's moving my way, and yeah. So hopefully, what I'll do is in the next day or two, once I book profits or this reverses, I'll make another video to see my thought process. Who knows? If the decline that's coming in the next few days is in 3 waves and is clearly corrective, I may just add to the position. So we'll see. So that's it for now. I let this video run a little bit long, but hopefully, there's bits and pieces that are aha moments for you guys, and you guys can learn, and we can all become better traders as a community. So good luck to all. Check me out at FutureMeDead.com, and you guys know where to find me on Twitter at FutureMeDead. Good luck.